So when you've taken out so many significant levels, we refer to them as key levels of significance, you do get this gestation, and people start to think that means it's a bottom because you've stopped going down. No, it doesn't. Generally, things are consolidation towards continuation bias rather than reversal, unless you have.
What do you see going on with crypto and more specifically Bitcoin? So we've seen a kind of recovery. We don't know if it's a recovery bounce, but Bitcoin, I think it's up around 20 to 30%. Ethereum, Solana up much more. What do you make of that recovery bounce?
Yes. So the big problem, you're quite right. And I think you mentioned, Raoul, it also highlighted this Bitcoin dominance element, that actually the Bitcoin dominance has been bleeding out. And generally, that's not a good thing. I'd prefer to see Bitcoin overperforming to the upside in an environment that would bring and the alts along with it later, than see what we're seeing now. Bitcoin being relatively heavy, and we'll just pivot quickly from the Bitcoin chart that many people will recognize to the dominance chart. You can see that we're actually bleeding out. Ethereum did really nicely. I think these are counter a larger bear trend rallies for the alts. And because Bitcoin is not officially going down and is walking out to the upside a little bit, still, and I make this very important point, still within the structure of three bears. So people have been waiting for us to turn bullish, and they've been disappointed. And we've spoken of the three bear flags. I call it, it's almost like Alice getting, who was it? It's Goldilocks getting lost in the woods. The three bear flags. And unfortunately, they've all broken and resolved to the downside. The observations people will make, if we have a look at the bigger time frame is on these bear flags, is that they've all resolved to the downside in this environment. However, we have just said what we've said about the dollar. We may have a longer pause before it resumes, but our emphasis or our expectation is that it will resume on strength. And I'll show you those flags over there. You kind of had a first warning one. And the interesting part about this is this was your 50K. So there's a concept called pegging that's very much associated with derivatives options. And these tend to occur at round numbers. That is a 50K level. If I draw the horizontal line through that, that's at the 50K level. This was at the 40K level, a flag again, a much bigger flag. And for quite a while, people were thinking, well, that's it, we're over with the downside. That was your 40K level. You can see this value running almost diagonally through the flag, and very similarly for the 50K over here. Unfortunately, all of those broke to the downside, again with reassertion of dollar. This is a smaller flag, and it was based on the 30K level. So this is, again, unfortunately, you're shedding 10,000 in each of these falls, flagging and going again. Subsequently, you're down here at the 20K level. You can see the pattern emerging here. It's not broadly a particularly positive one. Now, eventually, one of these fail and will be incorrect. But our basis and our thesis is on balance of probabilities. We keep on keeping on the basis that continuation dominates reversal. And this structure here does not constitute reversal structure on Bitcoin. Bitcoin we refer to as the God market of crypto. The others can go play and get all bouncy and happy like puppies. But if the rain comes back and Bitcoin turns down, they will be dragged down. So I don't know if that fully answers your question.
Yeah, no, so that's really interesting. It's looking at that pattern, it looks like a downward staircase or heading down. And where do you see that target going? And also, I noticed that you tweeted earlier this week also that I think it was on Monday that we hit the top of that channel and we were rejected. So what do you see with the price there with that specifically with Bitcoin?
So looking just more specifically to the flag itself, so we'll get off the daily and take it down to answer your question. This range is a very important range, and there's a reason why we stalled for quite a while. In fact, it might have been this risk-reward ratio possible trade that you saw on the Twitter as well. We made 4 major levels here. And that's why you gestate at that level. Just like I was making the point about the Euro USD doing the headline grabbing parity run, it was almost a no-brainer that it rallied. The Euro Swiss franc had done exactly the same before when the Euro Swiss franc ran the parity level. So we're seeing key levels. Then they rally, they take you off the scent. They get you to forget about the Euro short trade when you should be dominating, keeping the pressure on the Euro. In fact, you'll get better entries. It's an opportunity to short higher up. In a similar way, we made the 20K 20K, key round number. We made the legacy high at 19.8s, 9s, very close. That's that gray level there. That was essentially a support. Many people will see previous resistance as serving as some degree of support. Then you also made a bear flag downside that we'd drawn, the last one. This is the geometry that came down. That was captured just on a wick on this time frame. And you also, this is very much an HVF level, most people would not understand unless they've done a program, made a second interim on the 2.5 year setup that broke from the 8, 9, 10K to run all the way to the 64. That was a legacy key level for us on the way that we're now meeting, unfortunately, on the way back down. So when you've taken out so many significant levels, we refer to them as key levels of significance, you do get this gestation. And people start to think that means it's a bottom because you've stopped going down. No, it doesn't. Generally, things are consolidation towards continuation bias rather than reversal, unless you have inverted head and shoulders and very clearly identifiable. This pattern and price behavior, when it came and just kissed the top end of the channel, which is what you were referring to, is actually potentially quite a low risk entry for those that are bold enough to take shorts and understand money management. This is not a trade recommendation. This is not financial advice, usual aspects about that. But in actual fact, the 23K, you've got some relative highs around here. You could put a stop around the 23. You could hedge a hodl portfolio with a Bitcoin short, for example, for the 10K run, all the way up here at around 22K with a very short, about under 20, we're at 22,200 at the moment for literally $800 move. You could put on a better part of a 12,000 target, which when you're talking risk rewards, remember our game, if you're trading or investing, is how much juice are you going to get for the risk of that squeeze? If I just scale this so that you could see where the 10K would start to come in, it's quite a substantial downside. Many will look and say, that's never happening. Well, I'm afraid to say we've drawn 3 of these already before, and those 3 have already happened, and you're on number 4. So that's a 14.5 risk reward potential trade to. And maybe if you're holding certain tokens, if you have the skills, you can almost hedge your downside exposure to that, particularly if you're hodling Bitcoin in a cold wallet, for example.
Absolutely. Well, a 12K Bitcoin is definitely something that sounds like a scary news to me. But let's assume that Bitcoin doesn't go down and the trade's kind of maybe more sideways or even some upward momentum. Where do you see the technicals of altcoins, Ethereum, Solana, and the other altcoins that are prominent in the top 10?
So also Ethereum, such a significant token. Raul is very positively disposed to it. And I think he's right. There's a hive mind of great value in there. But the point I want to make when you're thinking about it is you should look at ETH-BTC and ETH dominance. And ETH dominance is essentially how big is Ethereum's market cap to all the players. And I'm going to show you a little bit of work we've done on, say, ETH, because I think it's the most significant other token. And I want to warn about getting too aggressive about longs. So the 20% dominance for ETH has been quite thin territory. And in actual fact, Ethereum lost a lot of ground. In fact, all the alts did when Bitcoin was staircasing down. What we forget as Bitcoin dominance is relatively weak now is how much more alts fell in those down legs than Bitcoin did. Bitcoin was dropping 10K a time. And when you're at 50K and you drop to 40, okay, it's 20%. When you do it again, it's 25. When you do it again, it's 33. But in some instances, some of those alts were shedding 60% in each of those down legs. So what you've had is, for example, Ethereum's dominance fell right down to 14%. It couldn't hold that magic 20%. Actually, all we've done so far is get back into the heavy traffic zone, which is very much a consolidation and a difficult hold for Ethereum. So I wouldn't be the charge-in buyer at these levels. Lower down, when you saw this possible reversal occurring around here, you could have speculated on that, but I just don't feel the long side is the safest side to be playing when you could have at any point dollar dominance reassert. So alts, getting sucked in on the alts are people that generally are trading low time frames, and that's a concern for me. And you should have the macro wins in your sales. So for me, the only way is nothing or short. until such time as we've had a proper reversal and we've failed a continuation to the downside. As long as you keep getting positive enforcement for your trend bias, then you should stay with it until. That means you will be wrong once at the end, and I could well be at that point.
Hey visionaries, thank you for tuning in. For more free crypto content like this, head over to realvision.com/crypto. You'll get early access to the most brilliant minds in the space to cut through the noise, get in-depth analysis, and get you ahead of the curve with unbiased insights.